Welcome everybody. This is the Thursday evening Viper trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you are absolutamente in the right place. First, we got to knock out our standard disclaimer. Yeah, I am here in the Bay Area. Charles S. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, good. So tonight's topic is how to handle losing trades. And I was thinking it might be a little more helpful to go through the process of what are winning trades first. I think that makes sense to get all on the same page as far as taking proper entries and seeing the right trades. And then we'll start, and then after that's all done, we'll circle back and we'll start talking about where things start to go wrong and how you can handle getting out. Okay. Now I'm going to switch over to screen one here. So most of you have, I think almost all of you or most of you have been to my webinars before. And when you first start to look to take a trade, what is the first thing that we need to do? What's the first thing we need to know before we can start trading? I'll put a little text box up here, and I'll help you out. It's a MC or a T. Good. Yeah, so what we call it here is we call it the current market condition, which is just a fancy word for trending or not. And I go through this almost every webinar, but the markets can do three things. They can go up. So in an uptrend, we are buying only at retracements to support. Right? Down. So a market can go up, can go down. And down is we are selling short only on retracements. I'm not going to do the whole thing. You know what it is. To resistance. And somebody typed in you need to know support and resistance to trade. That is true too. I would put that kind of second to the market condition. The market condition is of tantamount importance because that's going to drive whether you get long or short or trade a range, right? You can't do anything. It doesn't matter where support and resistance are if you don't know what the market's doing, right? To resistance. Lordy, Lord, Lord. Resistance. There you go. And then, of course, you have sideways. And you have to determine whether you want to trade that or not. But generally, you're going to trade the range, should you choose to do so. Okay. Now, let's look at some market conditions together on these charts. We'll do some different charts together. And I'm going to ask some questions, okay? Let's spend a few minutes looking at some charts. Over here on the left, between, say, here and about the middle of the chart, What was the trend here? Circling it with my cursor. You can just type in a U, a D, or an S. U would be up, D would be down, S is sideways. So in the early morning, this would be just to orient you. Some of you are completely new, or maybe you're even visiting us this week. Let me get you quickly up to speed so you know what you're looking at here. Open to the equity markets is at 6:30 Pacific, 9:30 Eastern. So that would be right about here, or the equity markets are opening. In the overnight session, midnight is over here. And this is the end of the Asian session over here to the left. In the evening, our evening time is their morning. So that's the big banks in, Singapore and Hong Kong are trading futures and their own markets over there, of course. And you can see going into here, and then this is the beginning of the European session in midnight right here. So it was a little mixed. You can make the case. Let me help you out a little bit as you're looking at this. That crossing over the midnight mark, we were kind of down with a little punctuated with the little sideways price action here, yes? And then just before the equity market opened, we kind of reversed course and started to head up over here. So the answer to the question was, in the early morning session of today until, about 6:45, 6:50, the trend was up. Let's go a little bit forward. And then obviously you can see that after about 6:45 or so, right in here, we flipped and started to head down. So this was a down condition, like such. Okay, everybody see that? Let's see if we can find some sideways conditions on the Russell today. Here, what looked to be a potential trend change then turned out just to be a sort of a food for the bears, if you will. They come in and then they start, and sell programs kick right back in over here. Obviously, you can see that around 7:30, 8 o'clock. You had a little bit of a sideways condition here, and here. Now, I want to talk about what's important when you're making trading decisions in regards to trending situations and or your entries. What are the dots? Some are big, small. Some are the big ones indicate possible trend change. No, these are swing levels right here. These dots, after swing level is established, this dot paints, and just the way the algorithm's written, some are bigger, some are larger than others. There's no real statistical significance to that in terms of your trading. It's just the way the script was written. We do also have these predictors here that are the real-time swing levels. You can see that when we're heading down, they stair-step down. When you're sideways, they go kind of sideways. Some people like to toggle them on, kind of get a sense of where they're at, and then you can turn them back off, if you find it's a little too busy for actual trades. Now, let's look at these two conditions here with the up and the down right next to each other. And I want to clear something up that I think confuses some traders, and I can understand why it does, and let's talk a little bit about how you can deal with it. The overarching most important thing when looking at the market condition and deciding whether you're going to take longs or shorts is the established swing levels, which is support and resistance levels. Notice here that in the case of the uptrend, the background is predominantly green. However, there are places where it changes to this neutral color here and here and here. Can you see that? And in some cases, the market comes below the midband and some of the bars turn red. Now, this condition can be confusing to people. Show of hands. Does that, when you get deep retracements that go below the midband and the bars turn the other color, when you're trading the upside? Does that get concerning for you? A lot of people have trouble with that. A lot of this, it's called deep retracements, called deep probes. We used to call it deep probes, yellow bar probe, red bar probe, phantom trade. There's various names for when you have a trend and you get a deep retracement into the other direction. Now, I'm just going to say this about this type of trade. If you find that this deep retracement trade is very, very challenging to you and you don't have good success with it, as I noticed that Cross had topped in up there, they mentioned that took a phantom or a deep retracement and then got creamed. You don't have to take those. Okay? We're going to talk about the different types of trades. We have minimum criteria trades where it has to come to a certain level, right? We have mid-band trades. Mid-band trades generally are located in the two bands above and below or right on the mid-band itself. Right? What I'm saying is in the minimum criteria, let me see if I find a minimum criteria short. Here's a minimum criteria right here. On the short side, we close above line 2 and stealth. So by our rules, that's the shallowest it can come to constitute a short trade in a downtrend. Conversely, if you're in an uptrend, you have to pull back into at least under line 6 and the green stealth in here. That constitutes a minimum trade on the long side. So you have minimum criteria trades on the long and the short side. You have mid-band trades, and then you have these deeper trades that go into the other direction. When we have the markets are moving so fast, Cross, I think sometimes Gary has time to put Fibonacci levels onto charts. But a lot of times the market's moving around so quickly in the morning that it's hard to take the time to put the fibs on there. I mean, if you have time on your own charts, you can put the fibs on there, obviously. And are they relevant to the depth of the retracement? It's hard to say. You'd have to throw it up there and take a look at it. Now, I don't want to disparage the background colors or the other colors that you see on here, but the overarching thing is the swing levels themselves, where support and resistance levels are. Okay, that overrides everything. There's, if you make your list, let's go ahead and put level of importance, market condition, which we just discussed, which is the trend, support and resistance levels, because that can define where we get into trades. So you got to put the lines on the charts. And Gary, we try to point that out in the room to help you out with that if you're having trouble seeing it on your own chart there. Support and resistance levels. And I would equate that to the swings. So let's talk about that just for a second. When we say swing, what does swing mean? You hear that all the time. There's a swing level there at, 2850. You got established swing. Maybe there's a line there too. Or, I see that there should be resistance at a swing level right around 2360. Misha, the predictors are not fib levels. That's a different script. This is tied. The predictors are tied to the swing levels. So notice they kind of mirror the swing levels up and down. Yeah, the Fibonacci's are a separate calculation, distinct from the predictors. Yeah, so a swing is like a pivot point. Okay, a swing is just very simply a place where the market, in the case of up or down, has come up to a level, and when you're in the thrusting part of a move. So let's look how these swings get developed. You can look at the downside and the upside. So in the case of shorties, when the market is heading down, we have the notion of thrust in the down direction. Generally speaking, the background will turn red. You'll notice that all the bands in the mid-band stair-step down. See it? See them starting to stair-step down like such. And then Why does a market do this in a downtrend? You say this is a downtrend, Charles, but it looks to me like that arrow you just drew is going up. That's the opposite of a downtrend. So what's going on there? Why do you have retracements in downtrends? Or, similar question, why do you have retracements in uptrends? Here's a push up over here, and then for some reason it starts going down. Why is it doing that? Yeah, profit taking. Exactly. So all the algorithms and all the traders and everybody who's trading the instrument you're looking at, in the case of the short, in order to get profits on the short, they have to cover. And when they cover, it creates an updraft, and so you get the retracement. As long as you continue to get a series of lower highs and lower lows, you are said to be in a downtrend, yes? And that is overarching of everything else. These swing levels determine what you're doing. It's good visually to have background colors and bar colors and all the bands and what have you. That gives form and structure to help you visually see what to do. But in terms of entry, the swings are of tantamount importance because they establish where you're going to get in and out of trades. Okay? That's just a fundamental level to understand there. All right. Let's go on to another chart. Let's do one more chart, and then we'll start to talk about trade entries, and then we'll start looking at a few that go wrong and what you can do to handle it. What do you what's the next chart you want to see me drag over here? Let's see what we got here. What do you want to see? Type in a couple instruments, and I'll see if I get the charts handy here. You want to see ES, or you want to see crude? What are you, team, in the mood for right now? What instrument would you like to see? Take some votes from the team, and whatever is the popular vote, that's what we'll put up. Wow. Predominantly, almost all ES and crude. Wow. Does anybody trade the Russell in here? Or is it too whippy for you? Does it remind you of YM that we kicked out? Remember we used to have YM, or not YM. Yeah, YM. We used to have Nazi in the room. Spazzy Nazi. Spazinus Wazinus, remember? We kicked that puppy out because she was just like a crazy child. You got to watch closely and just put your full-time attention into it. And then YM started getting bad too. Huh. Had YM in there. YM was behaving herself, and then somehow the algos got a hold of YM. Too many bars on the Russell. It's too noisy. Yeah, and the depth of retracement sometimes and can be tough on the Russell, and if you get deep retracements, they can sometimes turn into trend changes, whereas other markets tend to be a little more stable. They take time before they start switching into other trends. Now, looking for all of today. This is 5:30, so we open the live trading room at 5:55. Gary does, because the crude oil pits start trading at 6 a.m. Pacific, so that's why we do that. And what would you say that the direction was for oil today? From over here to over here. For the morning, the early morning, 5:30 to it looks about almost 8 o'clock. Up, down, or sideways? What was the trend on crude oil? Up, down, or sideways? Well, let me help you out. Put a line down here. I could put a line up here. So now, is this range tradable? That's the second question. Is this range tradable? Well, you've got support at 50.85-ish and resistance up here. So it's about a 60 tick range. And our requirements are 20 to 25 tick minimum. So yes, we were pretty much in a range on oil most of the day, at least the early morning here, right? And 60 tick range. So it was very tradable. There's trades in here. In fact, I think Gary was calling quite a few of them. I don't think I took any crude trades today. I might have taken one. I can't remember. I might have taken one in here somewhere. Maybe I caught a long trade over here when it popped up out of a mid-band box. Most of you know my go-to trades are the mid-band boxes. I love mid-band boxes. I use Object Trader every day to take them. Now you can see here that after about 8 o'clock, shortly after we closed the room, and markets do this, so they do this, they go sideways for 2 hours and then, you just stop watching it or close the room or whatever. We break the top of the range. We go sideways to up, arguably, yes, in here. So you're buying support. Sideways to up, and then you go into a little bit more of a pronounced uptrend. Here's some more deep retracements in an uptrend that like we talk about here. This is not a trend change. And here again, I keep circling back to this because this is where a lot of traders, and if you're looking at this chart and you trade crude oil, crude can do this. Okay, it won't. Sometimes it doesn't respect the mid-band like it should, and it goes deeper. And if you're going to trade crude, you've got to get very good at seeing and taking that type of trade. Because if you draw the line at the mid-band and you say, if it goes below that, if it bounced the mid-band, I'll take it. Okay, that's one way to look at it. And you did have some shots to do that right here. Here's some short rollovers over here, mid-band, because it stays within the band above or below the mid-band itself. So that's why we call it a mid-band trade, yes? And then here was a couple of bounces back over here. This is around 7:30 or so Pacific time. You had some bounces right there. Those were long trades right there, yes? See them? Let's get ES down here. Anybody trade gold? Any gold traders in here? Or you don't know? Most of you don't even look at it. No? No gold? Wow, it's interesting to see what people trade, huh? Let me get an ES chart up here. Give me a second. I only buy gold. Okay, all right. I get it. Give me a second. The ES chart is loading. Hey, Steve. Yeah, we'll talk about mid-band trades. Yeah. In fact, we'll start to factor in our discussion in regards to when they don't work out. Okay, I'm going to show ES in a couple of different ways. I'm going to show it on a 4 and I'm going to show it on a 2. I personally prefer the 2. You can trade that. I know people who use a 3. It's a little faster. You can use a 2. Now, I'm going to show you a couple of things on ES that you're going to notice if you trade this instrument. This is how ES rolls. And the reason for this is because it's very heavily institutionally traded. There's huge monster volume. You can do 1 million to 1.5 million contracts a day. Big institutions, algorithms, scripts, AI scripts from all over the world are trading ES. Okay, and it really, if you want the living definition of up, down, and sideways, you can see it almost every day on ES. Let's look at some examples. Let's get oriented real quick so we're all on the same page here and we know what we're looking at. So here again, midnight Pacific on the chart was right here. Right here. Asian session. You were coming off a little bit of an uptrend on the Asian session, early in the Asian session after the close of the markets in the U.S. And then we started to go a little bit into a downtrending type movement like such. But then but it was pretty choppy. Okay, it was down, but it was choppy. What do I mean by choppy? Well, if you contrast, we'll contrast different areas. Let me just cover a couple of things real quick first. And then you go into, and ES does this a lot. If you're going to trade ES, you got to get used to this. You go into these very tight ranges. It's just in a range, just for like mind-numbing hour after hour. Let's see how big the range was. Arguably, the range set up as early as 5:30 in the morning in the pre-market session. And here's 7 o'clock, and you're still in that range. You got support down here right around 32.50, and resistance up at 37.75, 38. What is that? 6 times 24. Barely tradable. This is sort of the tail end of, you're between 20 and 24 ticks here. So, the reason we say that is that we got to fade the bottom and the top. So if you're buying support, you're getting in here, 5, 6 ticks above the support level, and you're getting out up here, 5, 6, 7 ticks below the resistance. So what does that look like when you're trading a tight range? It looks like this. If you're getting long, you're getting out there, right? You're trying to buy, you're getting in here. This line's getting kind of sideways on me here. Right? You're fading the bottom at the bottom, and you're fading the top. And so between where you're getting in at 34.25 to 37 is 2.5 times 4, 10 ticks. Now, fortunately on ES, you only have 1 tick of slippage. So, either if you're very good at trading ranges, you can handle ES in a. So when you think about it, in a range, what's happening is that we say that the range has to be 20 to 24 ticks, because by the time you take out the fade of the top and the bottom of 5, 6, 7 ticks each way to get in your entry and your exit, yes, the only meat left on the bone is in between here. So it cuts the range of you're able to trade in half. Does everybody see that? Lewis says when it's choppy, he likes to just sit on his hands. You can do that. Yeah, see, here's the thing. Everybody, I want to just say this real quick, is that, we have traders with us for years and years and years, trading all manner of instruments all over the world, day and night, right? And we have to show these different techniques because they come up. And a lot of people don't like ranges. Some people love ranges, and they clean up. They make good money in ranges. If you don't like the chop and you're not good at this, I suggest you practice range-bound trading, because as long as you have range-bound trading in your repertoire, along with the longs and shorts, you'll be able to handle almost any market condition. That makes sense? It's kind of like a craftsman or a handyman, one that maybe has just a hammer in the tool chest. So he can only pound nails and things like that, right? Whereas a well-equipped craftsman with a full range of tools and drills and all manner of tools, they can build a house. So it's kind of like that. If you're going to say I don't want to look at ranges, and you find that ES was in a range from basically 5 o'clock in the morning all the way till 7, 2 hours, then you wrote all ES off for 2 hours. Basically, that's how that works. And there's not a problem with that. It's just you're going to have to find yourself something else to trade. All right, moving on. Let's look at the rest of the day on ES, and let's look at some trades that might have worked out and some trades that maybe didn't. Now, there was a funky spike. I remember this happening because I was short. I was short ES right here. I shorted this. I put a little box on the midband, and I got in short. I was trailing my stop. And notice it came down to this pre-market swing level down here, almost right to it. See it right there? Pre-market established swing level. And then all of a sudden there was some kind of funky buy program that came in. My stops were sitting right here, so I was in the good. I was making money. And I was looking for like a little rollover, a little bit of a retrace, and then roll and then break the support level. Well, it did the complete. It took the stop. I had a horrible fill, and it just shot like a rocket. And then, mind you, this all happened in less than a minute. Okay, let me impress on you how quick this was. Here is 7:30. Here's 7:30 and 23 seconds. Here is 7:30 and 53 seconds. So this thing went from 31, 32 all the way to 40 in like 40 seconds. That was really funky. But then the cool thing was, look at what it did here. It kind of went back into its earlier range here a little bit, right? See it? In fact, let me put the lines on the range here, which will help you visualize what we're talking about. And you should do this on your own charts right here. So if you look at it in retrospect, all that really happened from about 7:15, 7:30-ish all the way until almost 7:30 was that you were in this sort of overall extend, just a total large range. And all it did was poke through the top and bottom of it just a little bit. Right? See it? Just quickly and very quickly. There was nothing you could. I mean, I just stopped out of the short. There was nothing I could do on the long side, and I just let it try to settle out what it wanted to do. Kisses the top of the range again, and then she starts to head down. Yeah. So that's what that is right there. Let's take a look over here, and started doing the same thing. So what I'm saying with ES is, and if you trade it, you know this. I'll just bring this to conclusion here. You will get periods of time where you get some modicum of trend movement, where you will get short bursts down and short, spikes back up. Here's a mid-band trade short right here. I think we took that one. Notice how it didn't get back to the bottom, and then you go into this sort of funky upper range where it starts to look like it wants to take off, and now we're trading the long side on it. This is what ES does. This is just what she does every morning. Yeah, the trend changed here. So, obviously, now, let me leave these demarcations on here with these boxes, and put the 2 up. Okay, let's transition to the 2, and you might prefer the 2 because the everything is a little more pronounced. Let's change this to a 2. If you think 2's too fast, then don't use the 2. Use a 3. People ask me that all the time. What do you trade? What do you recommend? I say the 2. But a lot of people say, well, the 2's too fast for me. I like the 3. I like the 4 or whatever. Well, you go with the bar. The setups are all the same, right? Our software is the same. The trading methodology is all the same. Nothing changes as far as how you trade it. The difference is the size of the bar and how much degree of detail you want on the movement. Okay, give me a second. It's loading right now. Okay, there we go. There we go. Here we go. All right, so here's the 2. Here's the 2 right here. Now you can actually change the multi-time frame indicators, and it will move things around on here. So you have 4 range indicators, MTFs. So for instance, if you did a 2, it probably would move the midband up into here somewhere, right? Gary has a way to do that. If you're wondering how to do that, John S. says, I like the 2 on the ES. I'm trying to remember how to do that. Anybody remember how to do that? If we don't get it in here, we can ask Gary to show us in the morning. I don't change things around in here. Let's do that. Let's ping Gary, and then we get a little break in the morning. There's a place where you go into the multi-time frame deal, and you change it from 4 to 2, and then it adjusts everything. Adjusts all the indicators to use a 2. We'll do that in the morning. Okay. So here's a 2. Let's go back and look at the same session. See how much more detail you get on it. There's the end of the day right there. Here's that sideways box I was talking about. Let's go back and look at our earlier range. See the earlier range, you can see how much it blows it up. So you get a lot of bars there, you get a lot of detail. Like, with the 4, it'd be half this many bars. So take each 2 of these and lump them together. I just think it makes it on ES a little harder. I think it's when you have a 2, it's a lot more clear what to do. So here's that range we were looking at, the tradable range right here. Buying support, getting out, buying support, getting out. Comes down, kisses and rolls, does the funky spike. I don't think I've ever seen that on ES. That was the weirdest thing. Normally the algorithms are all kind of working together. This was a textbook mid-band short on ES right here. Now here again, if you adjust all the indicators to a 2 setting, it's going to look different. You're going to have more of a red background here, and the mid-band is going to adjust itself. Here's another textbook kiss and roll right here. This is right as we close the room, another short. Let's look at some trades that maybe didn't work out on ES and how you could have handled them. Okay? Let's start to look at that part of it, because that's one of the main themes of our subject matter for today's webinar. Let's take a look at some ones that didn't work out. But before we do that, I want to show one thing real quick, okay? I want to show what's called a transitional area. Yeah, you got to go into each indicator and change it from a 4 to a 2. I don't want it. It's going to take a lot of time. I don't want to run out of time because there's more trades I want to show here. Now, in this area right here, you are coming off of a downtrending type move from the sell-off here. Now, arguably, when this trade set up right here, this is a deep probe or a phantom trade where you come all the way out to the outermost band, or line 6 in the case of the downtrend, and you could make the case that this was still a short trade. It might have been concerning to you, the fact that the bars were blue and had retraced so far. And you might be concerned that this could start to be a trend change. Now, looking at this area right here in this box, what would be some of the clues that we would notice that would indicate to us that a trend change was afoot? Go ahead, just type them in. What's going on here? Take a look at the box, look at the swing levels. What's different from here to here? And we actually, if you're on your toes on this question, there was something that happened before this box that was a breadcrumb clue that ES did before it went into that box. It was a clue it left on the table there for you. In fact, I believe we called it, no, we weren't in the room. I was doing some trading after the room closed, so I was just paying attention to that. What's going on in here? And what happened before the box that was something to indicate to us that something may be changing, and we need to spike up our spidey trading sense? Okay, take a look at this area to the left. Take a look at the area inside this box right here, and then take a look to the area to the right. What is actually going on here? And now the thing I like while you're considering what I'm asking you, this all started about 8. Here's 8 o'clock right here, and you're looking at almost 9 o'clock here. So that's the beauty of ES. It moves slow. It took a whole hour to get from here to over here. So, I mean, it wasn't like you get some kind of weird, freaky spike, and you're trying to figure out what the heck's going on. You had an hour to figure it out what was going on. Okay, I see some answers coming in. Higher highs, higher lows. Mixed higher highs and higher lows. The pivots are going up. Bullish pennant. Background change, color changes. Good. Yeah. So here's the breadcrumb clue, and some of you probably saw it. I don't know if I saw it typed in. Did this swing here get down to here? Yes or no? This swing right here out of your mid-band box. Did it? No. No, it didn't. That was the first clue. By the way, this is a little tip for everybody. If you're looking to understand the early stages of a potential trend change, this is normally the first clue. You will get one of two things. One of two or three things. I'll just quickly explain what those are. The market will come down and test this level one more time and bounce. The market will get a higher low and bounce. Or the third condition that can occur is the market will come down and just slightly break it by anywhere from, 2 to 8 ticks or something, and then bounce. But what's important, this is called a double bottom, right? When it comes and checks it and bounces. You can make the case if it breaks it by 4 ticks and bounces, that's a double bottom too, yes? But a possible trend change breadcrumb to pick up on is the higher low right here. And then we push up and we take the midband out and we take the swing level out and the bars turn blue and the background changes. So from a technical, the way we teach it point of view, this is still a deep retracement, deep probe, or phantom short. This is still a short trade. Now, that being said, when this comes back and holds this level here, what has occurred by this point right here? A second higher low and a higher high, yes? So now, under these conditions here, like this, I start looking for long trades. I would no longer be shorting this. I would be looking for long trades. Arguably, the early adopters, this could be a long trade. If you weren't convinced there, then by the time you got this mid-band bounce, this was very clear. Now you're starting to head into an uptrend. Furthermore, this retracement here, which meets the minimum criteria, is definitely a long trade. I think everybody sees that, right? Everybody see that? See the series of higher lows here? And the first one that happened was here. If you want to work on training your sort of mind's eye, your trading eye, to learn little patterns to look for, this is one of them right here, the whole series of swings. And see how important that is to your decision making? Now, arguably, you could make the case, some of you, that you would say, well, this looks like another phantom to me, and you could still be shorting that. And that is true. However, if you tried to do it up here, you got creamed because it just bipped down a little bit and then took off, and the background was green. So by this swing over here, I think the argument for a phantom has lost weight because it's taken that swing. You've got 1, 2, 3, 4 higher lows and higher highs, and it's breaking the top. So just to round that out and be clear what I'm saying, in transitional spaces like this, you can actually trade both sides of the market. That is acceptable, right? You could be shorting here, perfectly acceptable. You could look at the long side and say, well, this is a higher low. I think I'm going to be buying support now. So buying here, this early adopter. Clearly, this is a long trade here, and this would be a no shorty, in my opinion. This is what you wouldn't want to continue to short at this point right here. Does everybody see that? Everybody see how this transition happened? Took about an hour on ES. I love that ES is slow enough. It's kind of like me. I'm an old man. I'm 57 now, so I move a lot slower than I did in my 20s, and ES is kind of my pace. Let's see here. Okay. Yeah, I see the comments, and it's clear when you point it out, and I think that's why I said the things that I did is, if you practice learning to look for this. So let me back up. Let me do it a different way. Let me show you. Let me explain how I look at it, and this might be helpful for you. Hey, Walter, bonjour, my friend. Mark says it's finally sinking into my head. So here's how you can do this, okay? It's very simple. I show this all the time. It's a very simple exercise you can do that is so easy. It doesn't cost you anything except a little bit of your time. And I do this all the time. It's like a little practice thing for me. Even the pros practice, right? So look, you go back and forth. So you see it? See that kiss and roll off the mid-band? You go back and forth again. You're training your mind's eye to see it. I see it come up. I see it kiss. I see it roll. Roll over. Okay, there's the short entry. Okay, now we go a little bit forward. Okay, it comes down. Now, when somebody was asking, Gary has a very good saying he came up with years ago. It's called look to the left to trade the right. And some of you might be wondering, what the heck are you talking about, look to the left to trade the right? Well, what he's saying is this, and this is what I do too, but I do it unconsciously now because I've done it so many years. But I'm constantly looking at these swing levels. Like I'm looking here, and more directly, I'm looking here. I'm looking here. I'm looking here. I'm even looking back here and here. I'm looking at these swing levels, and I'll sometimes, you can go ahead and put the lines right on the charts there so you can see it, right? Put the lines right there. Put the lines right there. Now, where this comes in is that as I'm looking back at these swings and I see the kiss and roll short, what's going through my mind as I take it is this condition right here. In other words, this kiss and roll mid-band, I am expecting it to get to here. That's what I want it to do. I'm looking for it to do that. Misha, we do. We actually do. Yeah, these levels are called out in real time. So, for instance, this trade might look something like this. Say you were short. And can you see the stealth line tracking it down and line 2, the thin red line? And stealth are tracking the sell-off in ES through here. See it? So we would take a trailing stop on this short, and we would say fade on your trail stop, whatever how many contracts you have left on. Okay, fade stealth by 2 or 3 ticks usually, right? Because there's times where, like right here, ES will touch and kiss stealth and then roll over. So if you had your trail stop sitting right on it, you could get bipped out of a trade that turns out to be very profitable, which this one was, yes? Now notice what happens here is that down here, you break through line 6 and stealth and close above it, so you would be stopped out of this trade right in here. So as you're stopped out, now you are looking at reentry. So if we were in the room, we weren't because this is after 8 o'clock, but theoretically if we were in the room, we'd be saying something like, I'm looking for a retracement up around the midband, anywhere around 29 and a quarter to 30-ish to get short. So what we're saying is this. While the market is actually sitting right here, I'm looking up here and anticipating if it gets up into here, this is my sweet spot where I'm looking to take a short. So it's always a constant. I think if you can train some critical skills to think about and learn here, is this notion of looking back and then looking forward, looking back, looking forward, looking back, looking forward, continuing to do that. Exercise your brain so that you can understand where the swings are and anticipate. And say ahead, anticipate to participate. I forget who said that. I came up with a great saying there. Anticipate to participate. And what we're saying is we're looking up here, and going beyond just looking there, we are looking there and saying to ourselves, and if we're in the room, we will say this out loud. If the market comes up to anywhere around the mid-band of 29 and a quarter to 27.30 area and rolls over, I would look to short that. And you would hear those words while the market is sitting here, right? So it isn't here yet. We're looking here, and we're thinking if it comes up here and rolls, I'm going to take a short. This is the anticipation part of it, looking beyond the right edge of the chart. So we come up, we kiss perfectly in a mid-band trade, we roll over. Our anticipation now that we're short is to get down to here and possibly break it for trend continuation down. Yes? Do you understand how we're doing that? This is really critical to your trade entry and execution. Now, let's follow through here for a second. Now we notice Okay, it's moving. This short trade is moving in our favor, right? It's coming down. It's kissing this swing, right? And it is the sort of little baby swing it set in. Just under line 2. Wicks it. Yes. Our trail stop's coming down. Trail stop's coming down. It's bouncing it. It's getting a little bit of a double bottom on the just under line 2 right here. Yes. And then it wicks up, and then it kisses a little bit lower, a little bit lower. It's not quite to here yet. Remember, we're looking for here, yes? We want to come all the way down here. We're looking for this to come down and break, possibly. And then it does this. The examples we're looking at here, Lewis, we are showing examples of short trades and how to trail and how to anticipate where to get short again. You say that? You see that? That's what we went through. And then what I'm trying to illustrate here is that right here, you did not achieve your goal. You didn't get here. And now it's going to go up and stop you out and go up higher. Everybody see that? So once we stopped out of this trade, wherever stop might have got you here. Stop definitely got you here. You would have looked at this and said, aha, that's a higher low. That was not a double bottom. It didn't get the bottom. It didn't break the bottom. I didn't get trend continuation. This held, and now it came all the way up to here. And the background is changing, and the bars are blue. I could still short this. This is a deep retracement blue probe phantom trade short. I don't really what you'll notice who asked this cross asked this question. I don't really I don't want anybody to misunderstand this. I do look at bar colors, but I don't really use them actively. I think they're good visually to see what's going on, but I think the swing levels in the line 2, midband, and line 6 are where most of the trade decisions are made, irrespective of bar color. That's what I'm trying to say, right? Because if we're saying that this kiss of this outermost band 6, when the trend is still down, is still a legitimate short, even though the bars are blue, this is where you traders, folks on the team here, might sense a little bit state of confusion, because blue, it would signify up. And that's what makes this trade challenging. You might be saying to yourself here, should I be taking longs now? Yeah, so you're going to notice when the bars get around the midband, not all the time. Here, let me show some examples. Here the bars around the midband were yellow. Here the bars around the midband were yellow. Here the bars around the midband are yellow. Yes? Now here's the bars around the midband are red. So that's not always the case. Now here they're yellow up here. So I mean, I look at the bar color, I sort of factor it into my thinking, but in terms of trade entry, I look at the swings and I look at the position of line 2, midband, and line 6 in relation to what the price is doing, where the swing levels are. There's a bar color script that's running in there, Misha. It's a bar color script that runs in there, so. All right, let's continue on. Let's work through the rest of this real quick. Trying to find if there were any ES trades that just didn't work out. I can't see any yet. Let me talk about a little bit more complex entry setups. Okay, let me do a pop quiz, make sure everybody's still awake. We only got a couple of 5 minutes left. So let's do a quick pop quiz and see if everybody's awake. I'm going to do a series of 5-second questions on trade entries before we wrap. These are going to be yes or no questions, and I'll help you. I'll point out a potential trade setup, and then I'll ask you if it's legitimate or not. Ready? To see if you understand the trading methodology. Is that a legitimate long trade, yes or no? This box. 5 seconds on the clock. Just type in a Y or an N. Boop. Y, N. That's it. 4 seconds. Is this box a legitimate long trade, yes or no? 3 seconds. 2 seconds. What do you think? What say you, team? One second. Is this box a legitimate long trade entry, yes or no? Time's up. No. Why is it a no? Why is that a no? In an uptrend, what are the minimum criteria for entry? Some of you might not know this, and that's perfectly okay. That's why we do these sessions, to help teach and get you to learn and understand how it works in a long trade. So our requirement is it has to close below stealth, check mark 1. Close below stealth, check mark 1. Yes, did that right here. Did it close below line 6? No. Right. Now, how about this one? Is this legit long? Yes or no? 4 seconds on the clock. I'm going to make these quicker. 3 seconds. Wire and in. Boop. 2 seconds. Box number 2, legit? Yes or no? Long trade. 1 second. Time's up. Yes. This is legitimate. Did it close below stealth? Check mark 1. Yes. Did it close below line 6? Check. Yes. Legit. Now, I want to talk about something here that you'll occasionally get on ES and try to help for a way for you to deal with it. And here's the reason we like to use region boxes with Object Trader tool, is a condition like this. Now, you can make the argument that this is a legitimate long box, yes? Close below stealth, check mark 1. Close below line 6, check mark 2. Legit box. However, did you get filled on it? On this box right here. Did you ever get filled long? Did it ever close outside this box to get you in? No. So while it was legitimate, it didn't turn into anything, right? It never broke up. It has to close outside. Now this box it did. You got long here. Now let's talk about this a little bit, and then we're going to wrap. In this case here, of the box where it did break, and you did get long on this one of these candles right here, you were in the green by, I don't know, depending on your fill, couple of 3 ticks. Okay, if you have 1 or 2 contracts on, you're feeling pretty good, and then it comes all the way back and back into the box. How should you handle that? What do you do? And this will be the last topic we discuss, and then we're going to wrap, okay? What do you do when this happens in your trading? You get into a condition, long, let's say. You're up a few ticks. You're feeling pretty good, and then it pulls all the way back into the box that you had. Now, let me help you with as you ponder your answer. The entry is here, and your stop is usually 10 to 12 ticks below there. So 35.50 less 10 would be, let's see, 2.5. Let's see, 35.50 less 233. Okay, so your initial stop, it was like 10 or 12 ticks, is sitting down here somewhere, depending on how large it was. Do you have to leave your initial stop down here after you get in? That's right, Lewis. That's good. There's 2 things you can do. There's 2 things. Let's talk about the 2 different approaches when you get upside down in a trade like this. By the way, just to level set your expectation, there was plenty of time to ponder solutions to this in the fact that you were filled here at about 9:10-ish, and it sat here dinking around for about 4 minutes. doing this, 4 or 5 minutes before it eventually broke up at 9:16. So you had 6 minutes to watch this. It's not like you had 30 seconds or a minute or something. And you're just like, what the heck am I going to do with this thing? You're all panicky. Try not to get panicky. Remain calm when markets move against you, okay? Try to remain calm. You have two choices. You can take your initial stop up tight to under the close, under the bottom of the box, so that if for some reason, unforeseen reason, this market just flips out and tanks, you don't take a full hit. You only take maybe like a 6 or 8 tick hit. That's approach number one. You just wait it out and then manage your trade accordingly. Okay, here take heads up, you get the scalp off, and then you trail the stop and you got it up here. Okay, so that's approach one. Approach number two, which who typed this in? I think it was Walter. Walter says, I would actually dump that trade and then look for reentry and rebox it right here. That would be approach two. So you go ahead and you cut, it's pulling against you. You don't want to chance at taking this out. You're like, all due respect, screw it. I'm hitting the close button. I'll rebox it here and look to get in again. In that case, you still catch the trade, yes? But you minimized your loss. You didn't take a full stop and you got out early. Tiny red dots. This is one of the indicators we have. These dots here. Yeah, we have an indicator. That's kind of like when a market comes to a certain level, it will put these dots in here. When the level is not breached for some period of time, the dots will stay in place. Here's an example here. Here's some examples up here. Underneath, they're here. See them? See the dots? Yeah, that's an indicator we have. Yeah, that's what those are. All right, so that's the way to handle that type of situation. You got to realize that, look, you're not going to get, and this is a hard thing for people to accept, is that you want to have 100%. Everybody wants to have 100% perfect winning trades all the time. But we're human. We make mistakes. We get in late sometimes, right? You chase a trade. You get into a hope trade. We make mistakes. It happens. The key to long-term survival is to minimize your losses. Know when you're not in a good place and get out quickly. Then look to go back in and catch a good trade. Okay, Lewis, Misha. Well, here. Okay, I'm going to say one last thing. Let me round it out this way. Okay, this is really super important. If you're brand new to trading, if you're new to Viper, if you're new to futures, you're just getting into this, you've got to keep it simple. You've got, in the beginning stages of learning, you've got to go with one chart. 2 max. And even if you had 2 up here, let's say you had, I wouldn't recommend crude. Definitely not. I wouldn't recommend the Russell. I would recommend starting with ES. Become a master of ES. And you can make a lot of money. I mean, you could throw 100 contracts at ES and it'll just gobble it up. Give me some more. You can leverage the heck out of yourself on it. Not that you would, but it's nice and slow. For the most part, it respects the swings. It's not going to run amok on you. It's a good one to learn on. You can do it in sim for a long time until you're comfortable and you see the trades and start taking them. If you start, what's going to confuse some of you, particularly if you're brand new, is to go ahead and put like 3-4 charts up and try to chase gold and crude and all the other what have you. It's going to drive you nuts. You're going to get frustrated. You're going to have losses, and you're going to want to quit. I'm telling you. I'm just saying. I'm not going to be all Mr. Doom and Gloom or anything. All I am saying is pick 1, 2 max, and then learn those instruments like the back of your hand. I'll tell you, I've traded so much ES, I can almost feel what the market's going to do sometimes. I know that sounds weird. It probably sounds weird, but I just, I've traded it so much. When it does this, I kind of know it's going to do that. You know what I mean? You want to get to that level of expertise with your instrument. If you do that, you'll make money pretty much daily. Let me stop the recorder. I'll take the last questions. Stand by.